I got to say that there's more happening now in the gold market, and there's more happening in, let's say, international finance, and there's more happening in bank activity, and there's more happening in a lot of different things, including the health, like cancer cures. This is an enormous explosion of information.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And, well, I guess we don't do this monthly, Jim, but once every other month or so, we get the great Dr. Jim Willie to come and give us some insight into what he is seeing and also his biceps. With Jim, can we get another shot at those? It looks like, have you been lifting some pineapples or something?
Papayas
Okay.
and coconuts.
Well, there you go. Down, well, we'll leave your country nameless, although I think people know where you live. But either case, Jim, it is great to have you on here. We're recording Tuesday, March 4th. Looks like the tariffs are in action. We'll pull up the latest news there. And Jim, and I know for all of your Canadian fans, would love to see a nice picture like that of Justin Trudeau. Perhaps in our call today, you can. I'll make a note. I'm curious what you think is happening. I know he said he was on his way out, and but anyway, we have a lot happening in the months since Trump was elected. We've had constant blowouts in the EFP premiums, the between the spot price in London and the COMEX futures. A lot of other things happening. Apparently, we're getting an audit of Fort Knox, and I think there are a few people as qualified to talk about Fort Knox as Dr. Jim Willie goes without saying. So, anyway, with that long intro out of the way there, how are you doing today, my friend?
I'm doing pretty strange, a little more strange than usual, but a little more excitement than ever before. I would say that I'm approaching the 21-year anniversary in April, 21 years. And I got to say that there's more happening now in the gold market, and there's more happening in, let's say, international finance, and there's more happening in bank activity, and there's more happening in a lot of different things, including the health, like cancer cures. This is an enormous explosion of information. And I don't know, these little glasses, they're great for reading. I can't read really too well anymore. Uh, I guess 71 years was enough for no glasses. Now
You can be one of those
where'd
old
you,
guys now who goes
where'd
around,
you
my
go?
glasses, my
Yeah,
glasses.
I need that little monocle. I'm telling you, there's more happening now in the last 2 months than has happened in the last 4 years. If you ignore the vaccine, I mean, financially, there is so much happening. I got to say regarding the tariffs, I've just got to say it. I believe the tariffs are a device to bring about economic cooperation, investment, foreign direct investment, and bring about gigantic trade deals, investment deals toward trade, uh, to invest in treasury bonds, in plant and equipment in the United States. There was a big deal announced, I think it was yesterday perhaps or Friday, about Taiwan Semiconductor. Okay, they use a lot of AI, but they're involved in, oh gosh, I think 70% market share of the global chip market. It's just astonishing. If we can get if we can get Apple, and we can get SoftBank, and we can get Taiwan Semi, I think it's a really good start for a gigantic technology parade. And you watch in the next 3 or 4 weeks, you just watch Canada bend. I don't know how, I don't know what exactly Trump is pushing for regarding Canada, but he's already announced that energy products are not subject to tariff, and I don't know if that applies to Canada. We got a lot of things going on. I'm very excited about the gold market. I think we're in the midst of a default in London. Okay, I got to yield to you, and I mean this in a very complimentary, respectful way. I don't imagine I can tell you much of anything that you don't already know in the gold and silver market. But what I can add,
Oh, come on now. This young
oh
buck, I'm just
no, let
picking
me
my
qualify.
notebook up to the great doctor, and you're the
Ah,
expert, man.
let me qualify what I mean by that. Um, what I mean by that is what I might be able to add to your current greater knowledge in the gold and silver market is exogenous factors that are coming in to play. I noted 47 factors that are aiding the gold market, gold and silver, and I put that in the February report that was posted last Friday. Um, I've never posted since 2003 that many reasons. I had 25 one article I wrote. It was with goldeagle.com. It was back in 2003, a year before the newsletter was launched. I was just a young buck and I realized, these economists are pretty stupid. They work for banks, they work for the government, they're corrupt to the left or they're corrupt to the right. They don't know what the hell's going on. They're misrepresenting the gold market. And I wrote 25 reasons why gold will rise. And it did in the next 3 or 4 years. Well, now it's like, here's 47 reasons, and that's kind of a magic number with Trump. Here's 47 reasons why gold is going to go to 5,000. And it's coming. And we're going to get, oh gosh, when they break the silver market, I don't know how it's going to happen. I don't know when it's going to happen. I just know that it's going to happen. And when they do, you're going to see Fibonacci playing music 10, 20, 30, 50, 80. I have a joke that I give to people. I say 10, 20, 30, 50, 80. What's next?
Hey, Jim, just since
It's
you
130. It's 130.
thank you for that. Just since you mentioned it, you were saying there about how you see the silver market as a matter of inevitability. Did you happen to see that call I did with Rick Rule? I think it was back in December, who was involved with the PSLV trust during Silver Squeeze, and so certainly some close access to the market. He talked about how he's like, we cleared out the silver in Chicago, then we cleared out New York, then Nova Scotia, Ottawa. But the takeaway that really stood out to me is that after all he's seen and someone with his access and experience, he also said that a fracture between the paper and physical markets remains to him a matter of when rather than if. I'll send that to you later. I think you'd find it pretty
Oh, okay.
intriguing.
I, I got a quick story to tell you about Rick Rule. And this is funny. And it's not meant in any way to be stupid or insulting or anything like that. It was about the second or third conference that I went to in the Cambridge House in Canada, and I went early to the speakers dinner. It was 2006. I went early to the speakers dinner, and I was the first guy there because I didn't want to get lost. I was new at this, okay? It was my second year of the newsletter. No, actually 2.5 years of the newsletter. And I got there and I was the only one there. So I was minding my own business, reading an article, and this guy walked in and it was Rick Rule, but I didn't recognize him. And I said, hi, I guess we're early. And he recognized immediately that I didn't recognize him. And he was really modest about it. And he said, you're Jim Willie? And I said, yeah, I just started a newsletter a couple of years ago, and I'm kind of new at this, so I came early so I wouldn't get lost. I don't know Vancouver very well. I said, what's your name? He said, Rick. Just Rick. I knew who Rick Rule was, but I didn't recognize him. So we were talking away. We're talking for 20 minutes, and the other people come in, and he said, well, nice meeting you, Jim. Good luck. Um, he was probably the nicest, most encouraging person at the conferences in the next 2 years. I was there for 4 years. I did 15 conferences. And he told me once, Jim, you bring a different angle to this. I know you're a statistical guy, but you bring in a different angle. You bring in currency, economy, and that's what I try to do, the exogenous factors. And he said, you're entertaining. Don't lose that. Don't lose that. And I said, no, I don't think I could if I tried. And we laughed and he walked away. it took me 24 hours to learn that that was Rick Rule. It was a friend of mine. I said, I said, yeah, there's a guy I met. There's a guy I met at the dinner last night. His name was Rick. He said, Jim, that's Rick Rule. What? Okay, pretty funny. It was funny. Very, I was naive. I didn't know people. Um, I met Bill Murphy. Bill Murphy was with me in Munich when I got the death threat. Bill Murphy was really nice to me, calming me down. I mean, he held my arm and offered me a glass of wine. I said, no, pineapple juice will be fine. But I was jittery. I was jittery all day. That November day in 2006 in Munich, a death threat from Homeland Security. Homeland
Yeah,
Security.
well, look at how you've overcome, which is obviously the
Yeah,
most important thing. And,
yeah.
going back 2003, I guess that was before you had your cult-like fan status on the internet. So glad you got to meet Rick. And Jim, if I could take one more question about something you said earlier. You were talking about the technology aspect. I was curious, have you heard much about that battery that Samsung has developed, the new, more powerful EV battery that I believe it was like 2.2 pounds of silver, so substantially more. It's interesting. I did read that it's not just, well, they're making it and thinking about it now, but that they are in the trial period where other companies are using it. I've seen the numbers. If 10 or 20% of the EV market adopts it and the size of the EV market stays the same or gets bigger, it would be it looks like it could come out to a couple hundred more million more ounces of silver. I would love to know if you had any thoughts on that one.
I actually wrote about that. It was honestly about 6 or 8 months ago, and I cannot remember all the details, except that it was very impressive uh, specifications. Its performance was very, very impressive. And I remember back then, I think it was about last summer. It was in the newsletter, mid 2024. And as I recall, they said in their own specifications and their own rollout plans that it was 2 years away. And I thought, well, the market has a way of pushing that a little faster when there's a bigger profit. People will work overtime and they'll just get more partnerships and they'll get it done. Um, I tend to think that we're going to see a revolutionary break with more advanced batteries, but we're also going to see the fuel cell. We're going to see hydrogen and oxygen brought together and making very powerful cars with water emissions. This is going to be really interesting, and silver will be a big player in the fuel cell car. And Samsung is a an up and coming powerhouse, but I got to tell you, it's going to be Toyota. It's it's going to be Toyota. They've already got oh gosh, see if I can get this right. Okay, now methane is NH3, nitrogen, three hydrogens. And I've been wondering for the last 5 to 10 years, how are they going to deliver the hydrogen for a car, for an engine, without having a tank that would blow up the city block if there's a car accident? And the answer is ammonia. Oh gosh, did I say methane? I didn't. I'm sorry, I misspoke. It's not methane, it's ammonia. Ammonia has a lot of hydrogen, and what Toyota has done is they built a turbo engine with water mixed with ammonia, and that delivers the hydrogen. So it's an ammonia tank. And I can't remember, golly, is ammonia? I know methane. No, ammonia is NH3. I'm sorry. I'm sorry. Methane is CH. Oh gosh, it's been a long time since chemistry. My advanced placement chemistry senior year in high school. Okay, methane is I think CH4 carbon hydrogen. Could you check? I think it's CH4. And ammonia is NH3. The key to Toyota is
CH4, you are correct.
okay, and ammonia NH3. Um, it's been a long time. My God, I'm talking I'm talking 53 years since high school grad. Long in the tooth, huh? All right, Chris, Toyota's got turbocharged methane supply of hydrogen. And in their prototype, their only complaint was this thing is 0 to 60 in 40 seconds. That was their complaint. 0 to 60 in 30 to 40 seconds. And then they said, well, let's turbo this. And they did, and they got some really good performance. Toyota's going to be leader in the class. And we better get in line. We better get Toyota building cars in the United States and sharing the technology. Um, and you know what they're going to do? They're going to share treasury bonds. They're going to do plant and equipment. It's debt for equity. You're probably all over this too. The Department of Treasury is going to issue credits in return for treasury bonds submitted, and the credits are going to be good for plant and equipment, supply, training, land purchases, you name it. And this is how we're going to get reindustrialized, but it's not going to be fast. This took 30 years. This took 40 years. I remember this. This is a very seminal, important event in my life. It was autumn of '84, and it was my buddy John, my buddy Bob, my boss Jack, and me in my office talking about a Wall Street Journal article about chip fabrication plants being sent to the Pacific Rim. And we joked and we said, well, those little Asian women, they got small hands, they can do all that chip work. Okay, that's the joke. The reality is that we got bankrupted. I said to John, Bob, and Jack, 3 or 4 or 5 years, we're going to have a national bankruptcy problem. That was Black Monday in '87. So it was 3 years later. We're going to have a return of manufacturing, a return of industry, Chris, and it's exciting. But the hard part is how it's going to happen. It's not an easy matter to convert treasury bonds into plant and equipment for productive manufacturing sites. And it's going to be loaded with AI. And I'm a little bit fearful of AI. I don't really care to discuss it too much. But Trump is using tariffs to get agreements, and watch the agreements that Canada makes, because they already created a fentanyl, a fentanyl czar. It's not fentanyl, you people, it's fentanyl with a Y. Canada created a fentanyl czar and then kind of removed all the power from that office. So there's no fentanyl enforcement across the Canadian border. Remember, China got flooded by opium 120, 30 years ago, whatever. We're getting flooded by fentanyl and cocaine, our nation, and it is doing severe damage to our society. I've already had 2 consult calls, and they were both women. They're each women, and each one had a daughter who was killed by fentanyl. So, except for that, I haven't heard of any deaths. I know that there are deaths. Okay, watch Canada comply with whatever Trump is arguing, and he's going to want to turn on the energy spigot in order to make gasoline, diesel, and just gas supply, make it cheaper. He's going to want lower fuel and lower cost electricity. Okay, I learned a long time ago. I'm a self-taught economist, and I have a saying in my bio from a way back. I'm unencumbered by the limitations of economics credentials. Okay, there are 2 major factors for an economy to lower prices. It's interest rates and the cost of energy.
See,
And that's
Jim, see, you have the advantage. You didn't sit through Jeremy Siegel's class at Wharton. You didn't get nailed with that one. So,
no, no, I caught a little bit of him on CNBC, and I thought, well, he makes some sense, but when he talks about Keynesianism, that's just
He was my
cupola.
teacher back in 2004. That was when I was in business school, and I'm, going down there thinking just pay attention, try and learn something. And he's explaining how if the economy's weak, Fed comes along, and so right in line with a lot of the other stuff that you hear out there in Wall Street today. But
Well, the Keynesian line. And you know what's really tragic is that John Maynard Keynes did not believe in excessive debt. He believed in paying down debt during the expansion years, and we didn't because we believed in the forever war and the what do they call it, the social welfare net. So with social welfare net and war, we had a big deficit in good times. That's not what Keynes advocated. He didn't advocate big government either. Anyway, that is one name that's been bastardized and really butchered in the economic textbooks, and it's really quite sad. Keynes made a lot of good sense. Now, if you're a household, move from macro to micro, which I do a lot when I make arguments. If you're a household and you're unemployed and you're undergoing worker training, and your kid is just graduated from college and he's still living at home and he's about ready to get a job too, you can go into debt a little bit, and then you get a job and your son gets a job and everything starts flowing and you pay off your debt in the next year and a half, and you're moving in a good gear. That's not the way the United States has treated debt. We went to war. I think, it's not a real mystery. We broke the gold standard because of the cost of the Vietnam War. And the Vietnam War happened before your time, before, when you were becoming, a young man, graduating in college and all that. I was in the 1971 draft lottery for Vietnam, 1971. I was 19. And I got a Pennsylvania 218 lottery number. They only went up to 160, and I'm out. I dropped my 1S deferment. I figured they'll never get to 218, those assholes, and they didn't. And I'm out. Okay. Vietnam almost got me. Okay. And I learned about Vietnam's Cambodia Triangle a lot earlier than most other people, because I knew people who went to Vietnam and came back and told me about it.
well,
Anyway, okay,
I
go ahead.
Well, I can quite imagine what that was like. Although Jim, just perhaps bringing some of the things you said earlier back to, I'm hooked on gold and silver. What can I say?
No, me
But
too.
you were talking about some of the things that Keynes said, and also obviously touching on what Trump is doing now. I'm of the school of thought. I very much agree with what I hear Luke Roman say, that there's an order of operations. You can do Doge, but you need a devaluation of the dollar first. If you do the cuts and you lose that GDP. Unfortunately, the way we're set up now, what is it, 23, 24% of GDP is coming from government spending. So it's like, on one hand, yeah, let's cut fraudulent spending. I think everybody's on board with that, although the body's so weak and fragile now. So Luke talks a lot about how that can work, but the dollar has to be devalued lower. Obviously, we're hearing about a Fort Knox audit. Scott Besson had his comments of, I'm sure you heard, of monetizing the assets on the U.S. balance sheet. He has since come out and said that he was not referring to gold when he said that. Maybe that's the case. Sometimes government officials say things that, until it happens. But
Yeah.
do you think that just the way it's being rolled out, or do you think this will work? From the Austrian school, there's a lot of concern that, gee, this is like, on one hand, there's parts of this that are good, but there's good, that day of reckoning might be arriving sooner. So I'm sure the audience would love to hear about any of that.
Chris, we need multiple things, multiple factors at the same time in big change. Multiple factors. You can't just say, well, we need a cheaper dollar than Doge with all the budget cuts. That'll make everything fine. Now, we need foreign direct investment. We need more oil supply. We need lower price for gasoline, diesel, for the entire distribution chain. We need incentives for the supply chain to overcome the damage of the lockdown. The lockdown really harmed the supply chain. That's where we got a lot of price inflation. We need encouragement for the supply chain. We need foreign direct investment in the hundreds of billions per year with fast track. Fast track. We need to get to production within a year, even if it's just low grade production. We need to get it within a year. Of course, yes, we need a cheaper dollar, but it's going to be very difficult. I tell you, we're starting to get, in a very real way, my forecast from 2015, 16, and 17. The dollar's going to rise, then rise some more before it vanishes. They're going to have to reduce the dollar somehow, Chris, when everything is pushing it up.
Jim, can I share what I personally think is going to happen?
Sure.
I'm going to pull up a forecast. I don't think anyone can argue with this, but let's take a quick listen. What you're describing, it seems similar dynamics to.
Which means they need the rate hike and a rate cut. They need a rate hike and a rate cut.
Jim, that is one of my favorite moments of you. I send that to friends regularly, and it makes people smile. I think we need to turn these into ringtones, but it's like what you're describing is similar to what you said there, though,
what
where
was the year of that, Chris?
this was just a couple months ago, superstar.
Well, we
But
need
it's
a
like that's the position so much of this feels like it's in, where it's like, well, if we cut spending and raise it at the same time, then we'll be good.
well, we need rate cut for stimulus, but I was just talking in a consult call with a client a few days ago, and she asked me, when you started the newsletter, how did you develop your clientele in the first year? And I said, I wrote a very interesting 3-part series with Gold Eagle, etc. That was before Kitco. Kitco got on board with my work in about 2007 or 6. But I wrote an article. It was called Ass Backward Economics, part 1, 2, and 3. Lower interest rates are not stimulative. They're not. They're not. Retirees have less spending. Insurance companies have less money, income. Pension companies have less income, and they all have big payouts. Why do you think we're getting a big rise in insurance costs for home protection for fire and hazard? Because of 10 years of low interest rates, not stimulative at all. Okay. We need to see higher interest rates to bring reality to the table regarding 36, $37 trillion of U.S. government debt. The very tragic thing right now regarding
Jim,
U.S. government debt is that we don't know if it's 36 or 37 trillion, because next month it might go up another trillion.
are we going to see a restructure on that during Trump's second term?
I'd like to get to the restructure after I talked about the more accurate accounting. I think we're going to get a verification of what the debt is, and it's going to be higher than what we think. I think we're going to have a restructure of the debt. I think we're going to probably see some kind of a gold revaluation, and it's not going to be, I really, honestly, there's a really good argument that it could be like 15 or 20,000 for gold. There's a good argument for that, but it's not going to touch more than a quarter of the debt. Okay. I have a firm belief based on a hint from an intel source, a military intel source. It's a really firm hint from a couple months ago that Trump is going to have a fumble on restructuring the debt and what do you call it? A reform of the dollar. He's going to have a fumble. He's going to be arrogant, and he's going to think he has it all figured out. He's going to have a plan. He's going to fall on his face. And then we start stage 2. Well, that didn't work. What are we going to do now? Okay. You can't have a 30-year problem. It's actually 50 years. The first trillion was, right after at the end of my college days, 73. The first trillion was Vietnam, and it just ramped up. It's been doubling over every 8-year period now when we had those 8-year the Narco presidents. Okay, I'd like to tell something. I'd like to say something. We're needing to recover now from 30 years of narcotics presidencies. Papa Bush, Clinton, Baby Bush, Obama, and the Biden show because he was dead. Biden was dead. Let's get over it. Biden was dead. What that guy was not Biden. It was some British actor. Um, we have to get over 30 years of narcotics presidencies where they were in a hidden fashion installing communism in the United States. And we need to get past that, Chris. And it's not going to be a 1 year recovery for the debt that took 30 years to accumulate. It took more than 30 years to accumulate. Let me say something else. I got a little reminder to myself. I have no social network account that posts anything. I have no social network account that posts anything. So anyone who has a Jim Willie account, I know there are about 8 or 9 in Twitter and there are about 11 on YouTube. They can follow my work and that's fine. But if they pretend to be me, it's not me because I have no social network account that posts anything. Um,
Jim, do you have any social network accounts?
I used to, but not anymore. No, I don't. I have none. I have not trusted Facebook from the start. Um, I knew that Facebook was a stolen product, and um, let me just add on some ugliness to an ugly cake. Amazon, Google, Facebook, Netflix, they all got pumped up. Tesla also. They all got pumped up by narco money. They don't just, there's no justification for their trillion or $2 trillion market caps. It is an infusion of narco money into the U.S. economy and into the U.S. financial markets in order to control technology. And you saw it with the censorship. All right, let's move on. Um, I think there's going to be a revaluation uh, for gold. And, you know, if you double the gold price, you're basically saying the dollar is cut in half. But I like to look at it as a dichotomy. You got a financial value of the dollar and you've got a purchasing power of the dollar. The financial value of the dollar is very much determined by dumping treasury bonds and liquidating derivatives. And the reality in households for the value of the dollar is how much was my food bill for my family of 4 and a dog, because I know you like dogs. Um, Dogs are not very expensive for dog food. It's amazing. You know, when I was in college and I was eating Alpo dog food, I found it to be really cheap. No, I'm sorry. That was my neighbor. He was a cokehead. Chris, the dollar is a mystery. Most people haven't figured out the dollar. I've been misquoted many times in the last 3 years. Jim really thinks the dollar is going to crash. I never said that. No, I said the dollar will rise some more, and finally rise again before it vanishes. And it's going to rise like a supernova because of treasury bond dumping and derivative liquidation. Okay, you know, the Wall Street Journal did not properly report the 2021 and 2 event in Japan. They dumped $200 billion worth of treasury bonds and their yen went down. They dumped treasury bonds and the dollar went up versus the yen. And they've never recovered since. And their solution, Chris, is to go to the gold standard. And right now they're facing assassinations. And I heard that a certain
Whoa, whoa,
newsletter
whoa, whoa,
writer.
whoa, 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 whoa. Slow down there. What about Japan going to a gold standard? Please elaborate on
Oh,
that.
the Bank of Japan announced a year ago they were going to quietly accumulate a lot of gold. Why do you think gold's going up? It's not because of you and me buying gold coins, I can assure you.
Well, actually, Jim, that was one of the things I wanted to ask you, where we have a guy named Matt Riley who's done a lot of research on the unit. You and I have talked about the unit, the proposal for a 40% gold back payment currency, if you will.
Yep.
And the last time I had Matt on, I keep thinking back to how this rally, which began just about 13 months ago now in mid-February, at a time when we were supposed to have 6 or 7 rate cuts. We got a couple of them later in the year, but it wasn't like we got unexpected easing. And I keep thinking, why did gold and silver rally at that particular time as opposed to any other year? I've wondered, I can't prove or verify this, but certainly have speculated in my own mind that perhaps what we're seeing out of the BRICS is the driving force. I asked Matt, he thought that was largely the reason. You're suggesting Japan as well, but how much, in terms of you said, is maybe Japan why the price rose? Along those lines, do you think that a lot of last year's rally really was driven, whether they're obviously they're
by the
not formally
BRICS.
using the unit yet, but was this to some degree anticipation of that, whether for the unit or
Yeah,
otherwise, but that was the BRICS?
yeah. They couldn't they couldn't get ready. I'm sorry, they couldn't be in a position. Pardon me, my eyebrows are bothering me. They couldn't be in a position to use the unit unless they had the backing for the unit. It's like, well, we're going to use gold for a lot of transactions, but we don't have any. Excuse me? Okay, so they did a year of accumulating gold so they could use the unit. Now, here's a statement that's really quite funny. Japan acted more like a BRICS nation than any of the BRICS nations. They're not a BRICS nation. They dumped $200 billion worth of treasury bonds between October of 21 and October of 22, and their currency went down 22%. Okay, that was a warning to the BRICS. Be careful how you dump your treasuries, because if you exit your dollar reserves, your currency is going to go down. Okay, this is, we exported toxic paper, Chris, and the world, just like John Connally said, Treasury Secretary to Nixon, the dollar is our currency and your problem. The BRICS nations are being very cautious now on how they're dumping gold. I'm sorry, how they're dumping the treasury bond. I think they had a good 18 months of gold accumulation. And regarding the interest rate concept, I was all over that. I was following that. The announcement and the realization of of Fed rate cuts, uh, I think it lit a small fuse in the gold market because of arbitrage between treasury bonds and gold. And there's another angle to that. Nothing is simple when it comes to gold and the dollar and treasury bonds. There's another angle to that. And I forecasted this, Chris. I said when they cut rates, they shouldn't cut rates, but they're probably going to cut rates. They did in September, and they did again in October. They did again following that. I said we're going to see a steepening of the treasury yield curve. We're going to see long bonds go up, and the short bonds, the short bills, they go down with the Fed rate cuts. And now we have a steeper yield curve, which is a signal of inflation. And that's a trigger for gold purchase. There are so many factors going on right now, and I got 47 of them. So, go to golden-jackass.com, sign up for the newsletter, support my work, because I'm a hurting cowboy. If you think I'm swimming along great, no, you're dead wrong. No, I'm getting attacked, and it's really quite sad what's going on. I'm getting attacked. And it's not at my front door. It's at a very high plane. I'm like a high plane drifter, Chris. Um, and oh, I got to put this up just to annoy you. This is Arcadia.
Jim, do you want to take a moment to explain to people your fascination with the Eastern time zone before we?
Um, I've always been confused with the time zone, and we're in the Eastern time zone here. And where I live, we're so confused. Sometimes we're Central time zone, and sometimes we're Mountain time zone, and it depends on the daylight savings time.
Jim, that's what I love about your shows. You get economics, a little science earlier, and basic date and time zone information. So, with that said, you're saying you do feel the BRICS were a driving force, and also that
Big.
Japan is How would you phrase what exactly you think
They
they're doing
act
and to
more
what degree
like a
you're
BRICS
speculating
nation.
versus fact?
They act more like a BRICS nation in Japan than any of the BRICS nations. They're de-dollarizing right now, and they're going to be going to XRP payments.
All right, and there is part one of our interview with Jim Willie, where, as usual, he had plenty to say. And part two coming up tomorrow night, Wednesday, 8 p.m. Eastern. Although, if you're sitting there at home and thinking you can't wait that long, you're just going to combust if you don't hear more Jim before then, well, do go check out golden-jackass.com. That is his site, which is in the description field below. You can see some videos that he's put together, as well as you can get access to his report, or even you can do a consulting call. So you can talk to Jim and hear some of his great stories and information. And anyway, that's in the description field below. And last thing before we wrap up, did want to mention that I have heard from a lot of people lately, especially some people selling and trying to find a good bid on their silver. And also, obviously, we have a lot of different bullion dealers on the show from time to time. So if anyone did need help finding good pricing or going through that process, always welcome to email me at chris@arcadiaeconomics.com and happy to help. And anyway, with that said, we'll wrap up for tonight, but do hope you enjoyed this one, and we will see you again with part two tomorrow.